Hello and welcome everyone to Oil Asset of the Day for the 21st of May 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we'll be reviewing oil prices for the week ahead. So first of all, just a recap on last week's price action, really what we predicted and what actually happened last week. So at the beginning of the week, as we mentioned, we were actually shorting oil last week and we took profits towards the lower end of the range. Remember, week to week oil is moving within approximately a 300-point range at the moment. We banked the sell short on WTI crude oil for 80 points profit, and we then reversed position after the oil inventories later on in the week, and we went long on Brent crude oil. We've in fact banked half profits for 150 points, and we've now moved the stop to protect the trade. So what can we expect now as we continue to progress throughout this week? So what do you need to know? Well, essentially, over the course of the weekend, we have seen an increase in tensions now between the US and Iran. So we've effectively seen Donald Trump tweet that he would be willing to retaliate to Iran with great force if they were to meddle with US interests in the Middle East. And we've seen definitely that impact the overall market. So oil gapped up on the open on Sunday, and then we've seen that gap get filled. However, at the moment on Tuesday, oil is again catching a bid here. We are getting supported from the lower end of the range. The range I'm looking at over the course of this week is approximately $61.80 per barrel up to $64.50 per barrel. So just under that 300-point range for this week. I still do think we might get just range-bound trade over the course of this week, but oil is also following its normal seasonal pattern here as well, which tends to be positive over the month of May. We've just covered gold in a lot of detail, where gold over the month of May is normally negative by approximately 1.2%, whereas oil is the opposite. Normally oil gains by over 1% over the month of May as we start to head towards the summer driving season as well, where you can see demand tend to pick up for oil prices too. Now, if we have a look at some of the major news items which are coming up this week you want to be aware of. On Tuesday, we have the API data, which will be the inventories data coming out later on in the session after 9 o'clock London time. You want to have an eye on that. And also Wednesday, of course, tomorrow, we've got the oil inventories data. That can be a major catalyst for some big moves in the oil market. So if you are trading oil, if you have open positions or you're looking for new trade opportunities, that oil inventories data at 3:30 London time is a catalyst for big moves. And so is the Baker Hughes oil rig count as well, which comes out every single Friday after 6 o'clock London time. Now, over the last week, hedge funds and money managers, they have again reduced their overall net longs here on WTI crude oil in the latest week. So you need to bear that in mind, that we might see rallies slightly capped here, essentially with some traders looking to sell into rallies. And also just bear in mind that we do still have these tensions between the US and China as well. We've seen essentially Huawei Technologies get blacklisted from the US, and that's also tending to have a negative impact certainly on global stock markets at the moment, and that will tend to have a negative impact on oil as well. The overall demand for oil is viewed as slowing, as a potential slowdown in the US economy and global economy as a whole with this escalating trade war tension. So you have those two dynamics at play at the moment. You have also the trade wars which are going on in the background, but also the tensions and the geopolitical tensions in the Middle East between the US and Iran, which can provide geopolitical safe haven for oil. Well, it can essentially provide geopolitical risk, which would see oil essentially break out potentially to the upside, as we saw on the open from Sunday, where we saw oil gap up on right off the open, offering a breakout move, and then obviously an opportunity to sell short that gap, which got filled from Sunday through to Monday as well. So really, in summary, what you need to be looking out for over the course of this week, in my opinion, we are looking to trade a range-bound market with oil. Our overall bias is bullish. We still have a long position on Brent crude oil at the moment, which is up over 100 points right now with the stop loss move to protect the trade. I am looking at a little bit more upside on oil, but watch out for potentially sellers to come back in on rallies here, particularly with oil. We're looking around that 64 to 64.50 zone with WTI crude oil, where you might see some profit taking and potentially some rallies get sold into. But at the same time, I'm looking for support to come in just below $62 per barrel, around 61.80. Right now, we're middle of the range. So I'm looking for some bigger moves off the back of oil inventories data or API data, or later on in the week on the Baker Hughes oil rig count. And of course, as always, you need to really be on top of what is happening with breaking news items or real-time news feeds, especially Donald Trump's narrative and the rhetoric towards the Iran situation at the moment. Any escalations in that often very quickly see oil prices go up, and you don't really want to be on the wrong side of that. So with that, that has been Oil Asset of the Day. I wish you good trading, and of course, we'll catch you back here next week for Oil Asset of the Day.